Welcome to Chapter 10 of H261, Hotel and Restaurant Accounting. Hopefully, we'll be able to complete discussion for the two chapters. So, let's talk about the Summary Operating Statement, or SOS. SOS. Ramandeep, can you read this slide, please?
Summary operating statement. This summary operating statement is important for profitability management. It presents much of the same financial information as an income statement, but in a different format. There are two summary operating systems, one for owners and one for managers.
All right, so last time we discussed the income statement. So today we're going to be discussing the summary operating statement. So here are some of the sections that you will find under the summary operating statement. So you have rooms available, rooms sold, occupancy, ADR, rooms RevPAR, and total RevPAR. So this is for hotels, right? This can also be for like function rooms, but mostly we use this computations for running a lodging business. So the middle part or the middle section of the summary operating statements, you have all these terminologies. And then at the end of the section of the summary operating statement for owners, you have interest, depreciation, amortization, total interest, depreciation, and amortization, income before taxes, income taxes, and net income. And then for operators, you will see at the end of the of the summary operating statement, it would include replacement reserve and EBI TDA less replacement reserve. So here are the schedules that accompany the room's operating statement. So you can generate this report from your automated accounting software. So if you're going to do it manually, then you have to go through each of the item individually. But if it's automated, if it's computerized, then you can just generate the report from the application. So I'm going to move to the summary discussion slides. So let's stop share for a moment, and then I'll open this slide. So let me share my screen. So here are some of the definitions of terminologies that would be relevant in our discussion. Royal, what is rooms available?
Rooms available, the number of rooms actually available for rent during a period.
Right, thank you. Raman, what is room sold?
Room sold the actual number of rooms rented for a period.
And what is occupancy percentage, Royal?
Measures room sales in terms of the hotel capacity to generate rooms sold.
What is ADR, Ramandeep?
Average daily rate per room shows the average selling price per sold room. Complementary rooms are not included in the calculation.
And what about rooms RevPAR, Royal?
Rooms RevPAR is an acronym for revenue per available room. Measures how well the hotel has been able to fill its room.
Right, so I'll give you an example. So for rooms available, let's say you are running a 100 room hotel. So the rooms available for sale would be 100 rooms. Now, how many rooms can you sell in a day? So you can have a maximum of 100 rooms sold. So let's say for December 25, you are fully booked. So you have 100%, so 100 rooms sold. But for today, let's say 50% checked out. So rooms sold for today is just 50 rooms. Now, occupancy percentage, you need to divide the rooms sold divided by the rooms available. So here are some of the formula for computation for occupancy percentage. So paid rooms occupied, how much did they pay, and versus rooms availability. So for ADR, average daily rate, you just divide rooms revenue divided by rooms sold. And then rooms revenue per available room, you can get it by multiplying your average daily room with occupancy rate, or you can divide rooms revenue over rooms available for sale. So this would be your common computation for an accommodation business. So we have different types of undistributed operating expenses. So you have administrative, general, information, telecommunication, sales and marketing, property operation, maintenance, and utilities. So all these we need in running our lodging business. So now let's go to our different markets. So our target market will come from many different types of customers. What is the Smurf market? Raman, what is Smurf?
Some of the abbreviation represent social, military, educational, religious, and fraternal organizations that can get a negotiated rate for a block of rooms.
Right. So let's say, for example, you have a group of guests coming from different schools. So let's say they do a field trip in your hotel, let's say every year. So let's say for middle school or high school, then you have your education account. Now, religious account coming from different religious backgrounds. So it can be from the Jewish community, the Christian community, those who are belonging to a religious sector. So this would be different groups of people. And since they are reserving many rooms, not just one room, so they can negotiate for a lower room rate. Now for cluster services, so here are the allocation of costs shared between hotels in a limited geographic area. So what is the acronym EBITDA mean, Royal?
EBITDA is an acronym for earnings before interest, taxes, depreciation, and amortization.
Right. What about IBIT? Raman, what is IBIT?
EBIT is the result of earning before interest, tax, depreciation, and amortization, less the total line called total interest, depreciation, and amortization.
Okay. Raman, this word is pronounced as depreciation. Depreciation.
Okay.
So depreciation
Okay.
means when you buy something new, it will not remain new every year. It's going to lower in value because you're going to use it. So wear and tear, it's going to make the value lower. So let's say you buy a brand new car for 50,000. So last year it's 50,000, but once you start using it, the value of the vehicle will go down. So that is the depreciation value. So now let's go to income statement gross operating profit. So you compute it by getting the total departmental profit less the total undistributed expenses. So how much was your profit? And then you need to take out all the undistributed operating expenses. So in other words, all your income, your sales, minus your expenses. So here are some non-operating income and expenses. So you have non-operating income, you have your rent, you have your property taxes, insurance, and other non-operating expenses. Royal, can you read number 7, please?
At what statement line does the similarity end between the summary operating statement for owners and the summary operating statement for operators? With the statement line called earning before interest, taxes, depreciation, and amortization.
So that would give you the difference between summary operating statement for owners versus summary operating statement for operators. Okay, so here are some example problems to understand summary operating statements. So let's say for the operation center, and then you have your undistributed operating expense and your non-operating expenses. So here you're supposed to get the value. You have to look for the value of X. So here we're looking for our average daily rate. So we get it by dividing the rooms revenue, total rooms revenue, divided by the rooms sold. So if the revenue is 897,500 divided by how much rooms you sold, so it's $50. So that is your average daily rate. So sometimes the the rate of the room is higher when it's peak season. So let's say during Christmas time. So if you buy rooms during Christmas time, then the rates would be higher. It can be 100, 200, depending on the demand. Now, during low season or lean season, then the prices can be $40, $35, so it would drop. So you average those rates, and then you have your average daily rate. So in terms of occupancy percentage, you have to get the value of the paid rooms occupied and divided by the rooms available. So how much is our occupancy rate for the month of December? So here, the example will give you 65.6%. So what about the unsold rooms? So unsold rooms would be around 34.4%, right? 34.4%. So with RevPAR, this is the computation formula, rooms revenue divided by rooms available for sale. And then for non-operating expense, it is already given. So you have to break it down to rent, property, taxes, and insurance. So it would give you a total of 80,000. Now here, there is a net loss of 18,000 because you lost money instead of gaining profit. So here you have your income before taxes, which is 400,000, but then you have to lessen or take out your expenses, interest, and depreciation. So that is 418,000 in total. So 400 minus 18,000, it's negative 18,000. So here in this example, it is a net loss. So here's another problem where you have your food and beverage department. So how much is your revenue coming from food? 900,000. Revenue coming from beverage is 270,000. But how much is your food cost of sale? 351,000. Beverage cost of sale 75,600. So your total cost sale is 426,000. So food profit is computed as 900 food revenue minus food cost of sale, which is 351,000, So your food profit is 549,000. So the same with beverage profit, you get your beverage revenue minus your beverage cost of sale. So that's 270,000 minus 75,600. That would give you a profit of 194,400. So to get the total profit on food and beverage, so you will get 1.170 million minus 426. So here the answer for A and B. So you add 549,000 plus 194,400, and then you lessen the total cost of sale. So that would give you 743,400. In this case, the food cost percentage is 39%. So that is 351,000. So food cost of sale divided by your food revenue, which will give you the percentage for food costs. And the same way, you can also compute for your beverage cost percentage. So you get your beverage cost of sale divided by beverage revenue. So in this case, it's 28%. Okay, so that is for chapter 10. So let's move on to chapter 11. So let's go back to the main slide. And we're going to be discussing the statement of cash flow this time. Okay, so chapter 11 is all about the statement of cash flows. So what is the statement of cash flows? Royal, can you please read?
The statement of cash flow provides information about cash receipts and cash payment for a specific period. This statement is used by managers, creditors, and investors.
Right, so cash flow meaning how much money is liquid or flowing into our business. So this is easily convertible into cash, which we can use in the operation of our business. So here you have SFAS 95. So this is a mandate that SCF should be included with the income statement, balance sheet, and the statement of earnings as part of the information provided to external users. So external users would be the government institution like the CRA for purposes of income taxes, and also if we have loans or borrowings from financial institution like banks. So if they ask for these statements, then you have to submit it. So what are considered cash and what are considered equivalents of cash? Raman, can you please read?
Cash saving and checking accounts, cash equivalents, financial instruments readily convertible to cash near maturity, treasury bills, commercial paper, money market funds, marketable securities are not cash equivalents.
So cash is something that you can use anytime. So you can withdraw it from your savings account or from your checking account. So it's easily available. While your cash equivalent, sometimes you need to sell it first before you can convert it into cash. Like, for example, if you have investments in the stock market. So if you want your cash to be liquid, then you have to sell your investment in the stock market, and then you can use it as a cash. So that's the definition of cash equivalent. So this would be the format for an SCF. So let's talk about income from operating activities. Royal, can you read the slide, please?
Income from operating activities. Income from operating activities include 1. Revenue from operating centers. 2. Interest income. 3. Dividend income. The less 1. Expenses of operating and support center. 2. Utility costs. 3. Fixed charges. 4. Income taxes.
Thank you, Royal. So in a hotel, the revenue centers would be sleeping rooms, meeting rooms or function rooms, and food and beverage. So those are your major revenue centers. In other words, how do you collect profit, or how do you earn income and sales? So these are from your revenue centers. Now, your operating and support centers, these are departments in the hotel that doesn't really earn income, but you need it in the operation of your business. So what are the examples of operating and support centers? So support centers in selling of your rooms. So of course you need your rooms to be clean, right? So your support centers there would be housekeeping. You need to sell the rooms, market it. So the support centers would be sales and marketing. So you don't really earn income from the operation of those departments, but it is needed to support your income operating centers. So this would be human resources, engineering and maintenance, housekeeping, sales and marketing. So all those back of the house offices that would support your main income generating centers. So here you have another mandate, but this is based on American operating lodging laws, so we'll skip that. And this is how you compute for cash flows. So I'm going to be using some examples later on when we discuss the other slide. Okay, why don't we go there now? Okay, so let me share my other screen. So here are some review questions for Chapter 11 for Statement of Cash Flows, or SCFs. So we already discussed the purpose of a statement of cash flow. So this is to provide relevant information about your cash receipt, cash payments for a period of time. So let's say it's for the year 2022. And then you can even break it down into quarterly or even monthly. So how do you use your statement of cash flows? So you would know how much cash you generated, how much cash is received from your borrowing, how much cash was received from common stocks or treasury stocks, how much cash was received if you sell property, equipment, or investment, how much cash was used to pay back some loans or long-term debts, and what amount are your dividends if you're running a corporation, and then how much is the cash that was used to pay or acquire property and equipment, and then how much cash was used to make investments. So you can use your statement of cash flow to generate all these reports. So if I am the owner or the board of director or manager, how do I use these reports? So these reports are used to judge the company's ability to pay for their debts, right? So how much are they capable of paying for a huge borrowing? So you need to estimate how much would be your future income earnings. So if you have a lot of net losses, that means you're not viable for any loans because you are a big risk. So if I loan you money and you're not earning money, then that can be risky. So financial institutions would use the statement of cash flow to think about if they want to invest in your business. So you can also see from this statement of cash flow, if you have excess funds, what you can do with the excess funds. Are you going to invest it? Are you going to put it back in your business? Are you going to expand your business? Are you going to open a new branch? You can also use it for determination of your dividend. So the income that you're going to divide among stock or shareholders. So these are some terminology descriptions of what is a treasury bill, what is a commercial paper, and what is a money market fund. So this is very similar to the Canadian stock market. So you have treasury bills are issued by the government. So in our case, the Canadian government. So government treasury bills are more secure, but it is a lot less lucrative compared to a money market fund. Now, a money market fund can also be risky because if the stock is up, then you will earn a lot of income. But if the stock crashes, then you might suffer for a lot of losses. But with treasury bills, the income is assured, but the rate of return is lower or smaller as compared to a commercial paper or a money market fund. So here are the 3 sections of the SCFs. Raman, what are the 3 sections? Can you please read?
The cash flow are classified into 3 major sections: operating activities, investing activities, and financial activities.
Thank you. So Royal, what does operating activities mean?
Operating activities refer to a hospitality company's primary revenue generating activities. For a hotel, revenue from its operating centers, less expenses of operating centers, support centers, energy costs, and fixed charges is classified as income from operating activities. Interest incomes and dividend incomes are also included in income from operating activities.
Thank you, Royal. So like I mentioned before, you have revenue generating centers and you have operating or support centers. So your revenue generating centers would be your sales from sleeping rooms, function rooms, and sales of your food and beverages. If you're operating a larger company, then you can also earn income from your kiosk, from your stores, from your gym, from your spa, from your salon, from rental of concessionaire, like if you're renting a space for offices, if you are renting tennis courts. So those are revenue generating activities. And then you have your support centers, which is needed for the operation of your business. So these are the back offices: housekeeping, sales and marketing, human resources, accounting, finance, and also maintenance and engineering. So let's answer question number 8. Raman, can you please read?
Why are not gains and losses from the sale of property, equipment, and investments considered a part of operating activities? Cash flow from the sale of property, equipment, and long-term investments are not considered as coming from operating activities because these transactions are not part of hotel's primary business purpose or day-to-day operations.
Right. So it is categorized in a separate area in your statement of cash flow. So it's not really income from the business. If you sell, let's say, your buffet table, or you sell your walk-in freezer, or you sell a parcel of your land. So this would be categorized as sale of property, equipment, or investment. And then here, why can't the net income from the income statement be used as a cash flow from operating activities? So the answer is the statement of cash flow is based on cash transactions and not on accrual or accrual accounting for income and expenses. So not all sales on the income statement were cash sales and not all expenses were paid in the period reported. So you can only include it in the report as long as it's included in the period where you are reporting all the different items. So let's talk about non-cash expenses. Royal, can you read number 10, please?
Depreciation expense and amortization expense are non-cash expenses that never affect cash flow. They never require a cash outlay because this type of expense is derived from adjusting entries that merely allocate the historical cost of a long-lived asset over an estimated useful life.
Right, so you have your depreciation expenses and amortization expenses. So for non-operating gains and losses, these are results from the disposal or sale of asset. So when you sell your property, some of your equipment, or some of your investment, like in the stock market, and also some of your marketable securities, this would be your non-operating gains and losses. So here are some of the transactions that you would be entering in the investing activities. So investing would be if you buy or sell short-term investments and non-current assets. So if you made an investment in mutual funds or marketable securities, if you buy property, if you buy equipment for your business, so that would be under investing activities. Okay, I think number 15 should be interesting because we can apply the knowledge of investment. So, Ramandeep, can you read the question for number 15, please?
How would the acquisition of land at a cost of 10,000
100,000.
100,000 purchased with a 30,000 down payment and the balance financed with a mortgage be showed in the SCF? Only the cash payment of $30,000 would appear in the investing activities section of the statement of cash flow. This transaction would require disclosure in the footnotes, which might take the following form.
So here you have your acquisition cost of the land, which in this case is 100,000. And then you made a cash down payment of 30,000. So you still need to pay them 70,000. So this would be your balance financed by mortgage. So you're going to show this as a footnote under your statement of cash flow. So here is an example of showing your statement of cash flow. So you have all these different entries in your statement of cash flow, and then you're going to identify if they're going to be considered operating, investing, or financing activities. So for amortization, they are considered operating activities. Proceeds from sale of short-term investment, cash used to acquire investment, proceeds from the sale of property and equipment, cash used to acquire short-term investment, proceeds from the sale of investment, and then you have cash to acquire property and equipment. All these are under your investing activities. Now, for financing activities, you have payment of principal on debt, cash borrowings, issue of capital stock, payment of dividends, and then you have purchase of treasury stocks and proceeds from sale of treasury stocks. So you know which category it would fall under, what kind of activity it is. So problem number 2, is it going to be considered an addition or is it going to be considered minus? So amortization is added, proceeds from the sale of short-term investment is added, while payment for principal on debt and cash used to acquire investment would be less. It's a minus, right? So here are the different categories and where should it fall under? So amortization, obviously, you have to put it under operating activities, and this would be an added item under operating activity. But the decrease in accrued liability, this would be less. This would be minus under operating activities. So let's use this motel as an example to show cash flow from operating activities. So you start with your net income and then you add and subtract all the different activities to get your net cash provided by operating activities, which is now 112,000. So for this bistro, you have your cash flow from operating activities. So again, you start with your net income and then you add or minus the different items and categories under operating activities. So this is 25,000 minus 12,000. You will get your net cash provided by operating activities. So here you have a restaurant. You start with your net income and then you add or subtract all the different items, and then it would give you your payables. So in this case, this is a negative. So it is it's not an income, but it's a loss because your income is only 5,000 and your expenses is 15,000. So you have a net loss of 10,000. So problem number 6 is for a restaurant again. So you have your total net income and then you add or subtract the different expenses and payables. So in this case, it is a positive amount. So you add 54,000 and 76,000. Then you get net cash provided by operating activities, which would be 130,000. Okay, let's see. Problem 8, problem 9, problem 10. Okay. I guess that's it. Let me check the other. Okay, so let me just